Welcome to today's class. We'll be learning issue of shares in company accounts today. This is a very crucial topic. You have to pay keen attention to understand the basic concepts on posting issue of shares. So if today is your first time of viewing our channel, please do wait to subscribe. And if you're a returning subscriber, we'll say thank you. Now, there are so many theories about issue of share that you should have read by now. What is a company and the formation of a company, the memorandum of association, articles of association, prospectus, and all of that. So we'll be looking at just few theory that relate to the calculation on issue of shares for today. So if you want to explore more on companies' accounts and issue of shares, you can consult your textbooks to read up most of the theory. So what is share, or what are shares? These are units of capital in a company. And shares may either be ordinary shares or preference share. So you can read this up. Ordinary shares are those shareholder. Ordinary shares are owned by ordinary shareholders. Those shareholders are paid after preference shareholders have been paid. While preference shareholders have preferential payments and they have a fixed percentage or a fixed dividend. Then you should also understand we have different forms or types of company. We can also classify company to either be public company, where we have between 2 and unlimited numbers that can form a public company, while private has 2 to 50, maximum of 50 members. Then for a public company whose shares can be traded in the public, they always have what we regard as authorized share capital, as approved by the regulatory authority, the authorized share capital. So this authorized share capital is the maximum capital that the company can raise from the public. In other words, the company cannot go beyond the authorized share capital. A company may have an authorized share capital of 100,000, or let's say 1 million shares. 1 million shares as approved by the regulatory body. So if the authorized share capital is 1 million shares, it means that the company cannot offer to the public beyond 1 million shares, but they can offer below 1 million shares. They can't offer above. Then we have what we call the issue share capital. The issue share is the portion of the authorized share capital that the company is willing to offer to the public. So the portion of the authorized share capital, the company may have 1 million shares and may decide to offer 800,000 shares to the public. This becomes the issued share capital. So the remaining 200,000 that is not yet issued can be termed to be unissued capital. Then we have called up capital. Called up capital. This is the amount of the issue share capital that the company has asked potential shareholders to bring up. So the payment of shares are always on instrumental basis. So that portion that the company has called the potential shareholders to bring up is regarded as a called up capital. While the portion that they've not called yet is the uncalled capital. Then we also have the paid up capital. This is the portion that the potential shareholders have paid for the calls that were made. So all of this will be considered while doing the calculation and issuing of shares. So when shares are issued by the company, they can either be issued at par, premium, or discount. At par talks about the fair value of the shares. When shares are issued at par, they are issued at their par or their face or nominal value. Then when shares are issued at premium, it definitely means that the shares are issued at a price above the par value or the fair value of the shares. So if the face value of the share, the fair value is 1 naira, and they are now issued at 1 naira 20 kobo, it means there is a 20 kobo premium. So when shares are issued at a price higher than the par value, they are said to have been issued at premium. And this premium forms part of what we call capital reserve. And they can be used to offset issue on discount. They can be used to as a bonus share to existing shareholders. Then what about discount? When shares are issued at a price lower than their par value, they are said to have been issued at discount. And those refers to capital losses in issue of shares. We can also have call in arrears and call in advance. Call in arrears, these are money due to the company but not yet received. So company may make a call and some shareholders may default. So for those money that are due but not yet paid, they are regarded as call in arrears. Then call in advance, these are money not yet due but have been received by the company. So that is call in. So some shareholders may pay their second call alongside their first call, even when the second call is not yet due. So, because the payments for shares are done on instrumental basis. They are done on instrumental basis. So what the company do, if the value of the share is 1 naira, they don't just demand for 1 naira. Let's say a company wants to issue 1 million shares to the public at 1 naira each. They don't just take the entire 1 naira times the 1 million shares and take the money from public. No, they break this down into portion. So the potential shareholders, they pay on instrumental basis. So they first of all pay on application, allotment, first call, second call, third call, as the case may be. So they will not break this 1 naira into various segments to receive the money bit by bit from the potential shareholders. So first call may be, application may be 30 kobo, allotment 40 kobo, 10 kobo, 20 kobo to sum up to the 1 naira. So they don't just take the entire 1 naira from the potential shareholders. They break the money into parts. So they may take some on application, they take some on allotment. So application, where the potential shareholders apply for the shares that were issued. Then allotment, this is the process of the company distributing shares to the qualified or to the potential shareholders. Then first call, they now make a call to make a payment. Second call, and just like that. Some may get up to third call, as the case may be. So this will be part 1 for this issue of shares. In the part 2, we talk about forfeiture of shares and oversubscribe. We may also look at a question that may talk a little bit about oversubscribe. But for the part 2, we look detail into forfeiture of shares, where a call is made and a shareholder is unable to pay when calls are made. So that share may be regarded as a forfeited shares and may be withdrawn by the company. In some cases, depends on the number of days. In some cases, it is normally 14 days given to the potential shareholder to make payment, after which the shares may be forfeited. And those shares may be reissued to another shareholders. So we treat forfeiture of shares and oversubscribe. So where an applicant, or probably when the company make issue for 1 million shares and they are now having 1,500,000 applicants, these are oversubscribed or oversubscription. How do we treat oversubscription? This will be dealt with practically in the next in part 2. We'll look at some of the shares will be rejected, some of the applicants will be accepted on preferential basis, while they may also allot on a pro-rata basis. On pro-rata basis. So we'll look details into that. Now, what is the accounting entries for issue of shares? The accounting entries. When application is received, when the money for application is received, you will debit the company's bank account because they receive the money through their bank, and you will credit application account. Double entry principle. When money for allotment is received, you will debit the bank account and credit allotment account. When first call is received, debit bank account, credit first call account. When second call is received, the same treatment, debit the bank account and credit the second call account. So we'll solve two questions in this video. So the first question we're going to treat is a very simple question to give us the foundation on how to post the entries. In this question, all the shares will be allotted to the applicant. In some cases, some applicants may be rejected. So in the second question we'll solve, some of the applicants may be rejected. So we'll know how to treat that. When there is oversubscribed, some might be rejected. It depends on the decision of the directors. So let's look at this practical question. Ozoro Nigeria Limited registered with an authorized share capital of 500,000 naira, consisting of 500,000 ordinary shares of 1 naira each. The shares were issued and payable on the following terms. On application, 50 kobo. On application, 30 kobo on allotment. 10 kobo on first call. 10 kobo on the final call. All the shares were fully subscribed and paid for. You are required to prepare the bank account, application account, allotment account, share capital, first call, and the final call. So in this case, we have 500,000 ordinary shares. Take note. And all of these shares were allotted by the company, and they were fully paid for. No call in arrears. So we asked to prepare the bank account. Okay, let's do our workings first. Let's show our workings. So what you do, you calculate the application money received. Application. How many shares were allotted? 500,000. All were subscribed to. There were no oversubscribed. Times how much do they charge for application money? 50 kobo. So 500,000 times 50 kobo. That will give us 250,000 naira. Now, if they oversubscribe, let's assume that the shares that the company issued was 500,000, and they have an applicant for 550,000. We have 500,000 issued. We now have applicants for 550. There is an excess of 50,000. Let's say the directors now decide to reject 50,000. So what you do, in your application amount, it is that same 550,000 you will calculate as the money you receive, because those money were paid into the company's bank accounts first. Then before you now calculate the 50,000, if the director decide to refund and reject, you now calculate the 50,000 that is the rejected or refunded amount. Then if you debit your bank account with this amount because you are receiving, the refund will be credited and application account being debited. So we'll see that in the next question. So the application amount here, 500,000 shares were applied for exactly at 50 kobo, and that's 250. Then how much was received on allotment? 500,000 shares were allotted times how much per share on allotment? 30 kobo. That will amount to 150,000. On the first call, it's assumed that everybody paid 10 kobo, that's 50,000. On the second call, all 500,000 shares were fully paid, 10 kobo, which is the final call, 50,000. So these are just the workings you do. So we're asked to prepare what? The bank account. Bank account. Debit, credit. Application account. Allotment. Okay, let's wipe this off. Allotment account. In some questions, there may be premium. When the shares are issued at premium, it will affect the allotment account and the share premium account. So it will be stated there that the share premium is included in the allotment. So we'll also see a question like that. Then first call account. Final or second call account. Ordinary shares. Ordinary shares capital account. Okay. Now on application, when the application money was received, you will debit the company's bank account and you will credit application account. That's all. So your particular will be application. How much is application fee? 250,000 naira. You credit application account, your particular will be bank. 250,000 naira. Allotment. The company made allotment. They will receive in their bank account. You debit the bank account. Debit 150,000. Then you credit allotment account. Particular will be bank. 150,000. Next, first call. 50,000. The company will receive in their bank account. First call. 50,000. You will credit first call account. Particular bank. 50,000. Next, final call. 50,000. You debit the bank account of the company and you credit final call account. Particular bank. 50,000. That's all. All you are left is to balance the account. This is just the entries. So to balance the account, now all this, you can balance this. There's no other. 250 plus 150, that's 400, and that will give us 500,000. So you say balance carried down 500,000. You know how to balance accounts now. So if we have balance carried down here, we have the balance brought down here. 500,000. Okay, now application account, allotment, first call, final call, all these are temporary ledger. You cannot show all these ledger in your statement of financial position. Hence, there is need for us to summarize this ledger into the ordinary share capital account. So we use the ordinary share capital to balance this ledger. So indirectly, we are transferring everything in the application, allotment, first call, second call, into the ordinary share capital, since we can show ordinary share capital in our statement of financial position. So how do you now balance this account to the ordinary share capital? You will debit this amount here to balance it off and credit the corresponding to the ordinary share capital. Indirectly, you are transferring all the credit side. Credit to this side. That's all. So, but for posting sake, to balance this account now, we need how much? You write ordinary share capital as your particular. Ordinary share capital, how much? 250,000. To be transferred to the credit here as what? Application. 250,000. And that's all. You move to allotment. To balance here, you use ordinary share capital, 150,000. So this will be transferred to the ordinary share capital. Allotment, 150. Next, first call. To balance this account, transfer to the ordinary share capital account. How much? 50,000. We show here as first call, 50,000. Lastly, for the final call, ordinary share capital, 50,000. Final call, 50,000. So it is this ordinary share capital account that you will balance and that will be transferred to your statement of financial position. Total is 500,000. So you see balance carried down, 500,000. Then balance brought down will be here. Balance brought down, 500,000. So if you are asked to show the balance sheet extract, statement of financial position extract. So if you are required, show statement of financial affair Uzoro Nigeria Limited. Show the statement of financial position extract. Statement of financial position extract. So assets, take note that we have bank. So under current assets, bank, your cash at bank. How much the total? 500,000. Then under equity and liability, finance by, we have the ordinary share capital there. How much is the balance there? 500. Okay, so this is a bank is 500,000. So ordinary share capital is also 500. So you see, asset is equal to capital plus liability. So we'll look at example 2, a more complex question. Question 2. So there is issue capital of 20,000 shares at premium of 20 kobo per share. This was to be paid as follows. Application 30 kobo, 0.3 per share. Allotment 0.40. Allotment 0.40 per share. First call 0.30. Okay, allotment including premium. Including premium, note that. First call 30 kobo per share. Second and the final call, 0.20 per share. Applications were received for 20,400 shares. The director rejected application money for 400 shares and was returned to unsuccessful applicant. All allotment money was received. Required, prepare the necessary ledger. So without wasting time, looking at this question, the company has an issue. They issued 20,000 shares to the public, but 20,400 applicants showed interest. So there is what we call oversubscription in this case, because the company cannot allot more than what they issued. They cannot allot more than 20,000 shares. But now we have applicants of 20,400. The good thing is this: where there is oversubscription, like I said, the company may decide to either reject on first come, first serve basis, or they can decide to accept some preferential shareholders, or they can decide to use pro-rata basis to share these shares to accommodate those entire shareholders. So they might have to just reduce the number of shares each potential shareholders applied for. So in this case, they have issued share of 20,000. Shareholders or potential shareholders made application for 20,400. And the shares, the normal value of the share is 1 naira. But we are told that it was issued at premium of 20 kobo. So there's an extra 20 kobo premium, which is the shares are issued above the par value of the shares. And that premium of 20 kobo, we are told it is included in the allotment amount. The directors now decided to reject 400 shares so as to accommodate the remaining of them. So in such case, let's show the workings. What you do, application, take note. For the application, it is that 20,400 shares you calculate for, because that's the total amount of application money you receive. So you calculate for that 20,400 times how much was the application fee? 30 kobo per share, 0.3. So 20,400 times 0.3 will give us 6,120. Next, remember that this 20,400 is exceeding the issued share. So they decide to return, in accounting, you can't just minus the 400 there and you must show record. Things must be transparent. So the refund, make provision or calculate the refund. How many shares were refunded? The value of shares returned, 400 shares returned. What's the amount of the shares they paid, the application fee? 30 kobo. So that will give us 120. So if your entries for application is to debit bank and credit application, now that you are refunding, you will have to credit your application, credit your bank and debit the application. Then the next is the allotment. Note that the company cannot allot more than what they issue. So if the total number of shares that is issued is 20,000, the company, so no matter what, in any question, the allotment will be the issued share that the company is willing to allot. So, and the shares allotted will be 20,000 shares. That's what the company have to give. So in any question, regardless of the oversubscribe, what the company wants to allot, or how many shares are they allotting, that's what you calculate here, times the entire amount. What's the amount for allotment? 40 kobo, 0.4, and that will give us 8,000. Then we also told that included in this allotment money is premium, and you must account for premium separately. So share premium What's the value of premium? The amount for the premium, we're told that the premium is 20 kobo per share. So 20 kobo is included. So the share value for the premium is 20 kobo. And that will give us a 4,000 naira. So how do you now record this premium? You will debit your allotment account and credit share premium account. That is all. For forfeiture of shares, where you have forfeited shares account, the balance of your forfeited shares account will be transferred to your share premium account to balance the account. So in part 2, we treat forfeiture of shares in details. First call. So all the calls and allotment money we receive, 20,000. How much for the calls? 0.3 for the first call, and that will amount to 6,000. Second call, 20, 0.20, that is 4,000. So these are all the information we need to solve. So without wasting time, I think in this example 2, you will learn how to treat where there is a refund for oversubscribe and how to treat premium that is not included in the first example. Then part 2, you will not learn where there is a refund, where they reject some applicants, then they now share on pro-rata basis. And also, some of the shareholders could not, some of the potential shareholders could not meet up either the first call or the second call or both. And also some on that question where maybe a call will be made, a shareholders may pay in advance. All right, so let's show the necessary account, bank account. Bank account. Allotment account. I think we are done with this information. Allotment account. Okay, application account. In some cases, some people treat application and allotment account together. It doesn't make any difference. You can also treat both of them in one ledger. So, application account, allotment account. Then we have our share premium account. Premium account. We have first call. We have second call. All right. Now let's post to the ledger. Application money received 6,120. You debit the bank account and credit application account. So debit bank with the particular application 6,120. Then you credit application account, particular will be bank 6,120. Next, we're done with that. The refund, it rejected 400 shares and refund was made. So since the company is not giving out, no, debit the receiver, credit the giver. They are giving back money. They are returning. You credit the company now. Particular will be application, refund. How much was refund? Refunded 120. You debit application. Particular will be bank. Refund of 120. You are done with that. Next is allotment. How much was received on allotment? 8,000. So you debit the bank account of the company and credit allotment account. We receive money for allotment. Allotment, 8,000. You credit allotment account, particular will be bank, 8,000. Next, the premium. The premium, you will debit allotment account to show the actual value without the share premium. Share premium should be shown in his own account. So to treat the share premium, you will debit allotment account and credit share premium account with that value. How much? 4,000 naira. You credit the share premium, 4,000. Next, first call. We receive 6,000 naira. So that's how you treat refund. That's how you treat premium. No technical entry there. First call, how much was received? 6,000. Right? You debit the company's bank account, 6,000. You credit first call account. Particular will be bank, 6,000. Lastly, second call. Amount is here, 4,000 naira. So, second call, 4,000. You credit the second call account, particular will be bank, 4,000. So you are done. What is left is to balance the account. So how do we balance this account? Total will be 10,000, 18, 24,120. 24,120. So balance carry down. Minus 120 from 24,120, we have 24,000. So our balance brought down will be 24,000. Then you balance the application account. So when balancing the application account, remember I said these accounts are temporary ledger, so they will not be shown in the statement of financial position. So hence, you now introduce the ordinary share capital. You introduce the ordinary share capital account to transfer these figures to the ordinary share capital, which will now be shown in our statement of financial position. So ordinary share capital account. Ordinary share capital account. Okay, so to balance application account, the difference between 120 and 6,120 is 6,000. So that difference will be taken to the ordinary share capital. So balance the account, 6,000. 6,120. 6,120. So that will be credited to ordinary share as application 6,000. That's the difference. Then for allotment, what's the difference here? 4,000. So you transfer to ordinary share capital 4,000. So you are balancing the account now. That will be total of 8,000. Total of 8,000. So this balance will be transferred to the ordinary share capital account, 4,000. Remember, share premium will be shown in statement of financial position. This is not a temporary account. Take note. It is application, allotment, and all the calls that will be summarized into the ordinary share capital account. Take note of that. So share premium will stand on its own. So first call will also be balanced. So you use ordinary share capital. Ordinary share capital will be, to balance the account, is 6,000. Close the account. Then you transfer to the ordinary share capital account. First call, 6,000. Then to close the second call account, You introduce your ordinary share capital as well. Ordinary share capital, 4,000. Then this will be credited to the ordinary share capital account. Second call, 4,000. And that's all. So you balance this account, balance your share premium account. So total, 6,000 plus 4 plus 6, that's 20,000 in total. Balance carried down, 20,000. So you have balance brought down of 20,000. So you also balance your share premium account. Balance carried down, 4,000. Balance brought down, 4,000. So when you are transferring to your statement of financial position, the extract, your asset, which is bank cash at bank, is 24,000. Your ordinary share capital, 20,000 under equity and liability. Share premium is also part of equity, 4,000. So you see, this will give us 24,000, which is equivalent to what we have as our asset. So this is treatment of refund and premium under issue of shares. So in the next year, in part 2 of this video, we'll be examining forfeiture of shares and allotment on pro-rata basis. So please do well to subscribe and share the videos to your friends and relatives.